everybody, welcome to video 2. So just going into what happened on the gold market, and also I'm going to translate some advice which I noticed this week and some chart work on oil. So starting with gold, let's have a look. So weekly, gold weekly, kind of similar to USD CAD in a manner. So with USD CAD on video 1, if I just go back to the week, if I go back to the month. If you check out USD CAD in a month, bear with me, what we had from the highs of more or less 3.7, just below 3.7, 3.650, whipped back. Market then started to retrace on the monthly levels, monthly perspective, coming off the back end of maybe these wicks here where it found support, boom, driving up. Now let's look at gold. Look at this. We came all the way down, back end of some support here where the previous spikes lie, spiked into that, and then what did we see? Price movement back to the upside. Now on USD CAD, I did show you on the other video that if we apply the Fibonacci retracement from the high into the low, we spiked at 61.8. Going over to gold, let's do the same thing. Let's have a look if this makes any sense. So we take from the high down to the low, and look what we can see. We can see the fib. Huge spike into 61.8. More or less in between this region, which I've told you how to use and shown you on previous videos. Now, target 1 for our fib is minus 27, so this lies at 1263. And looking at 1240, 1263 and then 1240. Excellent, excellent, excellent. So going into the day on gold, we can now see that if we have the MAs on here too, the moving average was broken. Moving average was broken. I'll fling that on for a moment. The MA was broken here. The break below signified the entry and the closure. Bang, after that we dropped. As you can see, we were above the MA for some time. Bearish engulfing, nearly. No, that is a bearish engulfing. 1-2, straight off the back end of the Fibonacci there, and then from there outward, boom, market falls, declines, and then what we're looking for now is, I'll keep the Fibonacci on for a second, but we have A, we have B, we have C, and then we also have D extension 1262 from 1291, and that is a nice amount of pips. Looking at 300 pips. Let's take that off. Let's move this. Alright, so let's move some of these levels for the time being because clear up the chart. So we had the highs. We had the highs in which the highs were not reached. If I bring this, I'm going to keep that on though for good measure. Keep that on for good measure. So across here where the crosshair is, you can clearly see 1, 2, 3. We have a 3-pin formation there, dragging the market back down. Resting at the bodies of the wicks there too. If I was to go ahead, number 1, we can place array, and then we take our box from the top of the wick down to the base of the bodies, which is here. Again, let me just try to, I need to refresh my chart. I don't think this is going to work here. Box regions. Come on. There we go. So we have that. So we also ran up into the box region from previous, which we can see that the market respected quite well. 1326, but I'm going to put this as 1325 as a psychological level, but we have this entirety of the boxes right there. We have the market used that area of support, we broke above it, we used the top end region as resistance 1, resistance 2, we broke back below. Then we respected the entire region on the back end of that candlestick right there, the shooting star. 1, 2, 3, 4. I've already explained this in various videos. Market comes back up, corrects itself 1 or 2 times. Choppy, 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 choppy. Spikes to the low to indicate momentum is still pushing higher in the lower time frames. Bang into the zone and straight back off it. So we had a good move from, let's say, 1325 to 1291. That's a big move. It's 350 pips nearly. I'm expecting this zone to break now and gold to continue to the downside to the Fibonacci target, which I've just put on there. If I go into the 4-hourly on gold, what we can also see and expect, let's have a look at the price action on a cleaner, zoomed in perspective. Now, some of the corrections that you may see, what's important to realize, guys, is we can do this with the market. The intraday highs and lows that we do find on the charts, we can just put the bases next to them. So we can mark out the ladder points, 1, 2. This correction here, that I'm not sure if that was the back end of news. It could have been. It's maybe some minor news. But it's made a new high and now the market corrected itself. However, look at the correction. The correction didn't take out the previous. The correction continued up. So don't get fooled into this. We need to break structure beforehand. And we always want to come off the bigger levels, mainly the 4 hour, the daily. We can get into the hourly and even maybe the 30-minute later on. But you want to start trading from the daily in the 4 hour zones and levels firstly. We have a 3-pin formation here, 1, 2, and 3. When we're in that zone, market rallies into it and then outward, bang. We also can say, okay, box region perhaps here. Is that a box region template? That box region, oh no, sorry, breakout. Breakouts. Get rid of that. Yep, there we go. So we can go from the wick highs, consolidation, upside, breaks the box region, the box zone. Have this on later videos as well. Break that, nice little kind of retest. Striving for that retest. If we could pull that box down, breakout, consolidate, drop. So now what we're looking for after this huge momentum move is we broke structure here, we're breaking structure here. We just now need to break this overall structure from this consolidation point. This here, I caught this before the videos were recorded, but gold came into these lows, and this is the daily PA, daily price action. Here we have 1, 2, 3, 4 spikes. Then we have uproar, liquidity spot, huge liquidity spot. So once we break that, once gold does take out that level, it's game over. It's toast. It's toast for gold. It really is, guys. It really is. On the back end of the Astro flip chart over here, look at this. Boom, boom, boom. Came into the level. Uproar. This is looking like it can break higher, right? Maybe come and retest that zone, take that zone out. But this here, huge trap, 0.1, 2, and then we're off on the uproar after this nice downtrend here, throwing spikes to the highs. Structure. So we have structure 1, wasn't broken. Structure 2, wasn't broken. Boom, into a new low, 0.1, 2, 3, third drive perhaps. Consolidate, breakout, and then so forth. So again, just like to give you that, my 2 cents on the other side of the fence on the Astro flip chart there. If you go into the hourly though and see if we can actually scope out potential entries on the hourly, look at this. Now, these are tradable. These are counter trend moves, even in the medium term swing bias. But what we have to be wary of is, again, if you want to get into this domain, which I will be showing you my personal trades of trading the hourly in alignment with what's on the top. So we go to box region, what's above us. We want to box off where the wicks and the spikes are, because you will see sudden momentum and the spikes occur. Okay, here again, and the market will pull back in the favor of the medium term trend, which in this case, a lot of corrective, choppy price action. But the main points of call on the hourly right there, I will be doing more intraday videos explaining these concepts. Ladder, step, ladder, step, ladder, step. Made a new high. So we can't get caught out in these moves. Can't get caught out in these moves. These ones you have to be at the computer. You have to be looking for the wicks. 1 wick, 2 wick, 3, 4. Market comes back into this wick zone and then boom. This is where the orders are being filled at the wicks. Fills orders and then bang, the liquidity comes in. A lot of people will see this, miss this move, and then try to get in at the lows or maybe get in too late. The move is more or less 80% complete. Market pulls back up. Wicks to the low, wicks to the low. Look at all these wicks to the low. And then once again, we can mix that up with some of this, which will be template, box region, breakout, want the breakout to the upside there. And that's still a nice move here as well. Consolidate, consolidate, consolidate. Spike to the high, spike to the high, spike, spike, spike. 3-pin, 1, 2, and 3 right there. Breakout, and then boom. Pull back, boom, because over here we are coming into the 1290 area. So the market, you can tell, if we put the crosshair at 1290, you can see here firstly the spike up. A lot of profit taken had happened from maybe this move or the entirety of these moves. Market consolidated for a while and then it wanted a break, pull back, and so forth. But the bias is still, in fact, short on the gold. And then again, we are running to the overall daily perspective of the fib. A, B, C, D. A, B, C, D. So it's the same stuff over and over and over again. You just have to have the eye for viewing it and valuing it and seeing where you can actually make use of it to make and turn over a profit. So this is just more or less pure price action trading, but I'm trying to open your eyes to certain numbers and what's going on behind the scenes in the market and to give you more clarity going forward. What also happened here, if you really wanted to apply, got a nice counter trend line there where we were rebounding, so we can higher low, higher low, higher low, upside, breakthrough, retest, continuation. That's looking pretty sweet. So that's gold in a nutshell, guys. Let me just go over to the oil chart. I didn't do anything really on oil all week. On one of the previous videos, I had oil set up though, and I still have the same setup on oil. So you can relate this to the prior video. Let's start with, if you look at the Astro flip chart, at the moment we have a lot of empty space down to where this point was. The huge breakout, we can see that liquidity was picked up upon the break, and the break was 64, was it 64? No, 65. Okay, so we broke 65 and started to melt, basically. Obviously, remember this is the alternative viewpoint over there, and then what we can clearly see was spike, 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 1, 2, 3, downside, 1, 2, 3. So we've gone from one area of consolidation, secondary area of consolidation. Through here, we broke through, retest. We were respecting the trend line very well. Also, I'll lie that on the body. Sometimes you can draw the trend lines from the wick to the wick right there. Okay, so we can have an inner and outer trend line. My preference, I tuned it to like the bodies, if you will, so you can put it from the wick to the next body. And you can see here on oil, oil is now starting to consolidate. Oil's consolidating and it's throwing wicks towards the trend line. But if you look closely, we can see one wick, two wick. They can be classed as equal highs. But if I move over to the clear side of the chart, we can see oil has been stepping up, spike through, up, 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 spike through, and it's throwing spikes to the downside. 1, 2, 3, 4, 5, and then boom, 6. So with oil, we can step back and we can look at the volatile spikes. Always expect maybe after, some medium-term spikes, we can expect a volatile spike straight through a level to pick up more orders and then continue and give us further upside in this case. So on the intraday time frame, let's have a look at the weekly actually. The weekly, what's important here on the week is that market, boom, up thrust. We took out 1, 2, 3 prior candles and the wick there. The previous week wasn't too strong in momentum, but the week just gone, and the week which closed yesterday evening, we can see that we are more or less, the body is pulling back up to the previous week. So boom, I expect continued momentum all the way up to 64 and then 65, where the space is here, where the space is. In this scenario, you don't really need to use MAs if we have the trend lines on there, but we can expect maybe a price explosion. We haven't had an explosion recently. We've had very, very medium-term price movements, relatively sluggish to say the least, but can we now get that explosive move, that 500, 600 pip explosive move up to 65? That's going to be an interesting one to actually watch. If we can maybe, let's see if we can apply Fibonacci in this case. If we can go to the fib tool on the day, so we have 0.1 up to the previous wick. So we had 1, 2 before this correction. It hasn't come all the way down to 61.8. I'm not interested in that right now. Let's try from here. So we have 0.1 up to 0.2. Again, it hasn't come down to the 61.8. Not interested in that neither. With oil, I don't really see fib being a huge dramatic tool to assist us in our trading journey on oil, so I'll probably leave the fib off oil. It does work well on gold and the currencies, but for oil, if we can just try to focus on the raw price action and keep it clean and simple, we can make ourselves a lot more profitable in the oil market. And again, some more live oil trades to come further upon our AstroFX content journey. So I'm going to wrap this video off. Pretty decent roundup. I hope you learned a few things from that. And yeah, on to the next.
I just want to go back.